Hello students, welcome to the Accounting Teleclass. Today's topic is Financial Statements of Limited Companies for Grade 12 students. This is in continuation to our previous video wherein we have explained about the public limited companies and the annual reports that they have to present, which includes financial statements, the director's report and the auditor's report. Today's learning objectives are that the student should be able to present the financial statements according to International Accounting Standards 1 format, which includes the statement of profit and loss and the other comprehensive income, statement of changes in equity, and the statement of financial position. Any company which is registered under the Companies Act should produce and publish these statements. They need not necessarily produce a detailed statement, but a summarized form has to be presented. So let us study these statements one by one. First, we will be studying about the statement of profit and loss and other comprehensive income. As you all can see, this format could be different from what you have studied previously. First, we need to take revenue. Then after that, we have to deduct the cost of revenue to arrive at gross profit. You all can see that the cost of revenue details are not given. Normally, when we calculate cost of revenue, it is opening inventory plus purchases minus closing inventory for a trading organization. But for a manufacturing organization, it is opening inventory plus cost of production minus closing inventory. Because these are to be published, we will not be showing the details of this. However, we will be showing the details of cost of revenue separately as workings, which would be a part of the answer. Then after arriving at gross profit, next we need to calculate other income. Other incomes include any income received by the company other than the regular trading activities. Say for example, rent receivable. We would be receiving the rent for letting out the premises, irrespective of the trading activities what we are doing. Then next you can see distribution cost and administration expenses. In this format, all the business expenses should be classified as distribution or administration expenses only, and that should be shown separately as workings. The next is other expenses. Other expenses include the expenses which are incurred in order to generate the other income or expenses which are not related to the regular trading activities. Then after adding the income and deducting the expenses, we would be arriving at the operating profit. Operating profit is the profit before interest and tax. The next one you can see finance cost. Finance cost is the cost of serving the debt. It means when we borrow some money, we need to pay interest. So that interest what we pay is the finance cost. After deducting the finance cost, we will be getting profit on ordinary activities before tax. Then next we had to deduct tax. What is this corporation tax? Corporation tax is the tax on the profits of the company. So after deducting the tax, we would be arriving at the profit on ordinary activities after tax. Now let us go to the workings that we have to show in order to prepare this statement. First, revenue. Revenue will be calculated as the total sales revenue either from cash or credit less the return inwards. In short, we have to show the net sales revenue figure. The next is the expenses which are relating to factory, which means the cost of revenue. As I told you, cost of revenue can differ for trading organization and manufacturing organization. Usually for manufacturing organization, we need to take the opening inventories, which can be either raw material, work in progress or finished goods, and deduct the closing inventory, which can be either raw material, work in progress, or finished goods. Other than this, we need to take the factory expenses like direct labor, direct material, and direct expenses. And if there is any discount received on the raw material that we purchase, that should be deducted. Then other than that, we need to take all the other factory related expenses like carriage on raw material, research and development expenses, production director's salary, factory overheads, factory rent, factory lighting and heating, depreciation of factory building, and depreciation of factory machinery. And after that, we need to add total of this, and that answer should be taken to the format. Then next, we'll be discussing about the distribution cost, which includes mainly the transportation cost, the selling expenses, and the storage expenses. Among distribution cost, we can see that the transportation cost, the selling expenses, and the storage expenses should be taken under this. So the main point is we need to identify. Say for example, shipping cost. Shipping cost means what? It is transporting the goods from one place to another. So that would come under the distribution cost. So like that, even if you do not know what type of expense is that, you need to identify what is the nature of the expense. Accordingly, you need to classify. So some of the examples we can see here, like wages of shop staff, transport staff, warehouse staff, sales staff, advertising, shop rent and showroom rent, then sales promotion expenses, warehouse expenses, transportation expenses, delivery expenses of fuel for lorries, and if you have depreciation on any transport vehicles, okay, then sales director salary, marketing director salary, etc. The next is administration expenses. Administration expenses include mainly the office expenses, which can be running of the office, collection cost, legal cost, or any professional fees that is being paid. So in the administration expenses, we would be coming across the collection cost, which includes the collection cost, bad debts, provision for doubtful debts, discount allowed. Sometimes there could be a decrease in the provision for doubtful debts. Then it becomes an income. So if it is an income, it should be deducted from the administration expenses in order to arrive at the total of the administration expenses. And the other expenses can include legal costs, professional fees, auditor's fees, finance director's salary, managing director's salary, office rent or expenses, administration expenses, and telephone expenses. So that is how you have to take the total. The next is the other income that we need to show. Other income, actually mainly we have rent receivable, as I told you in the example, for letting out the premises. But other than that, supposing if we are starting a factory canteen and we are gaining some amount, so that is also some source of income that we get, but it may not be really our main objective. Our main objective is to manufacture and facilitate the factory workers to provide some canteen. But sometimes we may gain some amount, or sometimes we may lose also. Okay, so interest on bank balance when you receive, when you have some positive balance. So of course, if you have a negative balance, it would be a finance cost. Other than that, if you are investing in any other activities, other incomes, investing in the shares of other company, making fixed deposits, or buying the debentures, those also will be the returns what you get on other investments. So this also can be shown as investment income as a separate heading, but if we include as other income also, it is fine. Then other expenses are mainly the expenses what we incur to gain the other income, or the expenses which are incurred other than the regular trading activities. Then next, coming to finance cost. Whenever we borrow a finance, we need to pay interest. So how much is the interest rate? What is the interest prevailing? Okay, That depends upon the market forces. So it could be interest on bank overdraft, interest on debentures, interest on bank loan, or even the amount what we are spending in order to borrow the finance is also coming under finance cost. So these are the workings. Other than that, we need to show some workings for the non-current assets, because whenever we are showing the non-current assets in the books, it should be shown at its book value. The depreciation should not be shown in the format what we are learning. So for that, what we do is, in the workings itself we show the non-current assets less the accumulated depreciation. Then we will be arriving at the non-current assets at carry over value, or you might have studied as net book value, which is now called as carry over value. The next, we are coming to the statement of changes in equity. First of all, let me tell you what is this statement of changes in equity. As you all know, equity means it is the capital and reserves together. But during the year, sometimes we may issue more shares, or we may sell more shares, or we may buy back the shares. So the capital may increase or decrease. And also, the reserves also change. Reserves are the amounts which we are transferring compulsorily or voluntarily from the profits of the company. So if there is any change to the reserves, that should be reflected in this statement. So say for example, we are transferring from profits to general reserve. The profits would reduce and general reserve would increase. And also when we pay the dividends to the shareholders, it should be deducted, the profits. So in short, in this statement we will be studying about the changes to the capitals and reserves. But this will be studied more in detail in your second topic. Now coming to statement of financial position. As you all know, the statement of financial position, what you have studied earlier, it would be almost the same, but there could be few changes which I'll be explaining it to you now. First, we need to prepare the non-current assets. Under assets, we have two types, current assets and non-current assets. So first we have to take non-current assets. In the non-current assets also, there would be mainly three headings: property, plant and equipment, investment property, and intangible assets. Property, plant and equipment includes all the tangible assets like property, buildings, equipment, furniture, vehicles or motor vehicles, fittings, etc. So all the tangible assets should come under this heading, and we need to show only the book value of those assets. Then what is investment property? Investment property is when we buy the shares of other companies or debentures of other companies, we are making an investment expecting some returns, right? So these should be shown as investment property. And also if we make some fixed deposits in the bank, we will be getting some returns like interest or dividends. So those should be shown under this heading, investment property. Then the company can hold some intangible assets also. Intangible assets means the assets which do not have physical appearance, like goodwill, trademarks, copyrights, license, and patents. Then we will be arriving at the total of the non-current assets in the third column. The next is current assets. Under current assets also again we have three headings, that is inventories, trade and other receivables, cash and cash equivalent. Here we need to write the same order because we need to record as least liquid asset to most liquid asset. So first inventories would come. Under that, again if you have separate type of inventory like raw material, work in progress and finished good, it should be shown separately. The next is trade and other receivables. First we need to record trade receivables, then the other receivables like calls in arrears, prepaid expenses, and accrued income. The next is cash and cash equivalent. Under that we have cash in hand and cash in bank. And after adding all these three current assets, you will be getting the total of the current assets. And when we add the current assets to the non-current assets, we will be getting the total assets. Remember that you need to record all the headings like inventories, trade and other receivables, cash and cash equivalent, and also you have to write as total assets. Next, we'll be coming to the other side of the statement of financial position, where we have to show the equity and liabilities. First, coming to equity. Equity is the total of capital and reserves. In capital, we have two types, ordinary shares and preference shares. And among reserves, we have capital reserves and revenue reserves. Anyway, we will be discussing about the reserves in more detail from the coming topics. So, as of now, you need to identify that the share capital and the reserve should be taken under this equity section, so that you will get the total of equity. The next is the non-current liabilities. As you all know, non-current liabilities means these are long-term borrowings, which could include debentures, bank loan, or any borrowings which is for more than 1 year. Now here we can see some two new things like provision for taxation and provision for legal cost. Provision for taxation is the tax that has to be paid to the government. So we need to normally take this as current liability. But there are some taxes which can be paid for more than 1 year. So it will come under non-current liability. And the legal costs are usually for more than 1 year. So it would come under the non-current liabilities section. However, you should be able to identify, or if it is given in the question, you have to take accordingly whether it is falling within 1 year or more than 1 year. The next heading is current liabilities. Under current liabilities, we have trade and other payables, short-term borrowings, and current tax payable. Trade and other payables include trade payables, accrued expenses, and prepaid income, and interest owing. Among the short-term borrowings, we have bank overdraft or bank loan. Actually, short-term borrowings is something new for you. This heading you need to write, and you have to take here any borrowings which is within 1 year. And next is current tax payable. Current tax payable, as I told you, that is the tax what we have to pay, the corporation tax. So it should be paid usually within 1 year. So mostly it should be shown as current liabilities under the heading current tax payable. And when we add these three current liabilities, you will be getting the total of current liabilities. And when we add the non-current liabilities with the current liabilities, we will be arriving at total equity and liabilities, which should be same as total assets. Then your balance sheet would balance. Now, students, till now you have learned about the three formats. Out of that, the statement of profit and loss and other comprehensive income and statement of financial position are the main things what we will be doing in this topic. So in order to have a self-assessment or a revision, I will be giving you some of the questions from the past papers which you need to go through to check yourself to what extent you have understood. First, June 2013, question number 1, where they asked to prepare the statement of profit and loss and other comprehensive income. You need to go through that and identify or classify the expenses into cost of revenue, distribution cost, administration expenses, or other income, or finance cost. The next is January 2013, question number 1. It is about statement of financial position, where you had to identify the items as non-current asset, current assets, equity, current liability or non-current liability. Then there is one more question in June 2014 where they have asked you to prepare both the statements. So you can just refer, identify, classify, if possible, prepare the statements and check yourself to what extent you have understood. So that's all for today, students. Thank you very much. Have a nice time.